The world watched in disbelief in April 2025 as the US dollar, the bedrock of the global economy, plummeted over 10% against major currencies. This was not a gradual decline, it was a sudden and dramatic plunge, the likes of which hadn't been seen in decades. The impact was immediate and far-reaching, sending shockwaves through global markets and leaving investors scrambling for answers. From Wall Street to Tokyo, the message was clear. The global financial order was being shaken to its core. The dollar's decline signaled a loss of confidence in the United States' economic leadership. For decades, the dollar has been the world's reserve currency, used for everything from international trade to oil pricing. This dominance has given the US significant economic and political power. However, the April 2025 crash indicated a potential shift in this global dynamic. The world was left to grapple with the implications of a weakened dollar. Would this be a temporary blip, or the start of a more permanent decline? One thing was certain. The aftershocks of this financial earthquake would be felt for years to come. The world was entering uncharted territory, and the future seemed more uncertain than ever. The seeds of the dollar's demise were sown long before April 2025. Many point to the aggressive trade policies pursued by President Trump during his second term as a key contributing factor. In a move dubbed Liberation Day, Trump imposed sweeping tariffs on goods from China and other major trading partners. His stated goal was to protect American jobs and reduce the trade deficit. However, the consequences of his actions were far more complex and damaging than anticipated. Trump's tariffs triggered a series of retaliatory actions from trading partners, igniting a global trade war. This tit-for-tat exchange of tariffs disrupted global supply chains, increased prices for consumers, and created uncertainty in the global economy. The trade war eroded confidence in the US economy, leading investors to question the stability and predictability of American markets. As the trade war escalated, so too did the pressure on the US dollar. Investors began to lose faith in the dollar as a safe haven asset, dumping their holdings and driving down its value. The Liberation Day tariffs, intended to bolster American economic dominance, had ironically set in motion a chain of events that would undermine the very foundation of that dominance. The dollar's decline had a domino effect on global markets. The US stock market, already showing signs of vulnerability, experienced a massive sell-off. The S&P 500 and Nasdaq, two key indicators of US stock market health, plummeted over 10% in a matter of days, wiping out trillions of dollars in market value. Panic selling gripped investors, as fear and uncertainty replaced the previous year's bullish sentiment. While stock markets tumbled, the price of gold, a traditional safe haven asset, soared to new highs. Investors, seeking refuge from the volatility and uncertainty of the stock market, poured their money into gold, driving up demand and pushing prices upwards. This surge in gold prices further illustrated the depth of investor fear and the lack of confidence in the US dollar. The market turmoil of April 2025 served as a stark reminder of the interconnectedness of the global economy. The dollar's decline was not an isolated event. It had ripple effects across all asset classes, impacting everything from stocks and bonds to commodities and currencies. The global financial system, already grappling with numerous challenges, was now facing a new and potentially more dangerous threat. The Federal Reserve, the central bank of the United States, found itself in an unenviable position as the dollar plunged and markets reeled. The Fed's dual mandate is to maintain price stability and promote maximum employment. However, the events of April 2025 presented the Fed with a difficult dilemma: how to address a weakening economy without exacerbating already rising inflation. The tariffs imposed by the Trump administration had contributed to inflationary pressures in the US economy. The trade war had disrupted supply chains, leading to higher prices for imported goods. At the same time, the weakening dollar made imports more expensive, further fueling inflation. The Fed was now faced with the prospect of a slowing economy and rising inflation, a dangerous combination known as stagflation. Cutting interest rates, a traditional tool used by central banks to stimulate economic growth, could potentially worsen inflation. However, raising interest rates to combat inflation could further slow economic growth, potentially pushing the US economy into a recession. The Fed was walking a tightrope, trying to balance competing objectives in a highly uncertain environment. Its decisions in the coming months would be crucial in determining the course of the US economy and the future of the dollar. The dollar's decline had a particularly acute impact on emerging markets. Many developing countries hold large amounts of dollar-denominated debt. As the dollar depreciated, the cost of servicing this debt increased significantly, putting a strain on their finances. Some emerging market currencies also came under pressure, depreciating against the dollar despite its overall weakness. Meanwhile, the turmoil in traditional markets provided an unexpected boost to cryptocurrencies. Bitcoin, the world's first and largest cryptocurrency, saw its value surge as investors sought alternative assets perceived as hedges against inflation and economic uncertainty. The decentralized nature of cryptocurrencies, operating independently of central banks and governments, appealed to those disillusioned with the traditional financial system. The dollar's decline and the subsequent market volatility highlighted the vulnerabilities of the existing global financial order. It also underscored the growing appeal of alternative systems, such as cryptocurrencies, which operate outside the control of traditional institutions. While it was still too early to predict the long-term impact of these developments, one thing was clear: the financial landscape was undergoing a profound transformation. Section 6. Weathering the Storm Strategies for Investors. The events of April 2025 served as a wake-up call for investors. The era of complacency, fueled by years of bull markets and low volatility, was over. Investors were now confronted with a new reality characterized by heightened uncertainty, market volatility, and the potential for further economic shocks. Navigating this turbulent environment required a reassessment of investment strategies and a focus on risk management. Diversification, a fundamental principle of investing, became even more critical. Spreading investments across different asset classes, such as stocks, bonds, real estate, commodities, and cryptocurrencies, could help mitigate losses and reduce overall portfolio volatility. Investors were advised to consider increasing their exposure to safe haven assets, such as gold and other precious metals, which tend to perform well during periods of economic uncertainty. In addition to diversification, investors were encouraged to adopt a long-term perspective. Market downturns, while unsettling, often present buying opportunities for patient investors. Rather than panicking and selling at a loss, investors were advised to focus on their long-term financial goals and ride out the storm. Seeking professional financial advice was also recommended, as navigating turbulent markets requires expertise and a deep understanding of economic and financial trends. Section 7. The dollar's uncertain future, predictions and possibilities. The dollar's dramatic decline in April 2025 raised questions about its future as the world's dominant reserve currency. While the dollar's status was unlikely to be challenged overnight, its decline could potentially accelerate a gradual shift towards a multipolar currency system where other currencies such as the euro, yuan, or even cryptocurrencies play a more prominent role. Several factors could influence the dollar's future trajectory. The U.S. government's fiscal and monetary policies, the stability of the U.S. economy, and global geopolitical developments would all play a part. If the U.S. government continued to pursue policies that undermined confidence in the dollar, such as protectionist trade policies or excessive government spending, the dollar's decline could continue. Conversely, if the U.S. government adopted policies that restored confidence in the U.S. economy and the dollar, such as fiscal discipline, structural reforms, and a more predictable foreign policy, the dollar could potentially recover some of its lost ground. The future of the dollar remained uncertain, and its trajectory would depend on a complex interplay of economic, political, and geopolitical factors. Section 8. Staying ahead of the curve. Knowledge is power. The events of April 2025 underscored the importance of staying informed about economic and financial developments. In today's interconnected world, events on the other side of the globe can have a direct impact on our lives, our investments, and our financial well-being. By staying informed, we empower ourselves to make better decisions and navigate for our financial well-being. By staying informed, we can make more informed decisions, mitigate risks, and capitalize on opportunities in a constantly evolving financial landscape. Section 9. Your dollar, your future, reflecting on the personal impact. The dollar's decline and the subsequent market turmoil were not just abstract economic events, they had real-world consequences for people's lives. From rising prices at the grocery store to shrinking retirement accounts, the impact of the dollar's fall was felt by individuals and families across the country and around the world. It was a stark reminder that economics is not just about numbers and graphs, it's about people's lives, their hopes, and their dreams. As we reflect on the events of April 2025, it's important to ask ourselves some fundamental questions. How has the dollar's decline impacted my personal finances? What steps can I take to protect myself and my family from future economic shocks? How can I ensure my financial well-being in a world of increasing uncertainty? These are not easy questions to answer, and there are no simple solutions. However, by staying informed, seeking professional advice, and making sound financial decisions, we can navigate the challenges ahead and create a more secure financial future for ourselves and our loved ones. The dollar's decline was a wake-up call, a reminder that we are all connected to the global economy, and that our financial well-being is inextricably linked to the decisions made by governments, corporations, and individuals around the world.